All right, so let's dive into SiriusXM. Maybe you're an investor, maybe you just love putting on your favorite channel when you're on a road trip. But you've probably noticed the stock has really been taking a beating lately.
Yeah.
Trading near an 11-year low. So is this a chance to get in on a bargain, or is it a falling knife?
Yeah.
Well, we're going to find out today as we deep dive into this article from The Motley Fool. And they're making a pretty bold claim. They're saying that SiriusXM could 10x.
10x, huh? That definitely gets your attention. But before we get carried away with those kinds of returns, I think it's really important to understand exactly what SiriusXM is up against right now.
Yeah, you're right. And the article does acknowledge that the company's facing some serious headwinds.
Definitely. I mean, they're dealing with a decline in subscribers.
Yeah.
And for the second year in a row, in fact, as of September, they had 33.2 million subscribers. That's down 2% from the previous year.
And it's not just those subscriber numbers that are worrisome either. Their revenue has also been declining for 2 years straight.
Right. And to make things even worse, they've had to lower their revenue targets for both 2024 and 2025. Initially, they were projecting free cash flow of $1.2 billion for 2024, but they've had to scale that back to just $1 million. So clearly there are some challenges here.
Yeah, absolutely. And I mean, all of this has been reflected in the stock price. It plummeted more than 50% in 2024 and it even hit an 11-year low. And what's interesting is that this decline happened while the broader market was actually rising. So SiriusXM is really lagging behind.
Yeah.
It makes you wonder, is this just a temporary dip, or is there something more fundamentally wrong with the company?
Well, that's the million-dollar question, isn't it? And that's what makes this deep dive so interesting. Despite all these red flags, the Motley Fool is still arguing that SiriusXM stock could potentially increase tenfold.
Okay, I'm all ears. So what's their reasoning behind that?
Well, their first point is that SiriusXM is incredibly cheap right now. I mean, from a valuation perspective. Even with those lowered profit targets, it's currently trading at just 7 times its forward earnings. I mean, to put that in perspective, that's significantly lower than its historical average, and even lower than many of its peers in the media industry. So for value investors who are always on the lookout for a bargain, this could be a really tempting opportunity.
That makes sense. Buy low, sell high, right? But I'm guessing their argument goes beyond just the current stock price.
You're absolutely right.
Yeah.
They also point to a few potential catalysts on the horizon that could boost SiriusXM's fortunes.
Okay, I'm intrigued.
Yep.
Lay it on me.
Well, one of the biggest potential drivers is the drop in gas prices we've seen since May of last year. What do you think that means for a company like SiriusXM?
Well, if gas prices are lower, people are more likely to drive more. Right. More road trips, longer commutes, which means more time spent listening to the radio, including satellite radio.
Exactly. And it's not just about those lower gas prices either. We're also seeing a trend of companies calling their employees back to the office, which means more people are commuting again.
So more people stuck in traffic, looking for ways to entertain themselves.
Yeah.
During those long commutes.
Yeah.
I see where you're going with this.
And then there's the potential for a rebound in new car sales. You know, the auto market has been pretty sluggish lately, but eventually we're going to see an uptick in purchases, and that's going to expose a whole new wave of consumers to SiriusXM. You know, it's often included as a trial feature in new cars.
Yeah.
So that's a pretty effective way for them to reach potential subscribers.
That's a good point. I actually got my first SiriusXM subscription that way.
Right.
When I bought my last car. But I have to ask, is this just wishful thinking? I mean, is there any real evidence to suggest that these catalysts will actually pan out?
That's where things get really interesting. Because it turns out that the Oracle of Omaha himself, Warren Buffett, is betting on SiriusXM.
Wait, Warren Buffett?
What?
The guy who's famously avoided tech stocks for years? He's investing in satellite radio?
He is. And not just a little bit. Through his company, Berkshire Hathaway, Buffett owns over a third of SiriusXM's outstanding shares.
Wow. That's a significant stake. And I'm guessing this sends a pretty strong signal to other investors, right?
Absolutely. When someone like Warren Buffett invests in a company, people pay attention. And in this case, Berkshire Hathaway actually increased their position in late 2024, which suggests they're confident about SiriusXM's future.
So it's not just the Motley Fool being optimistic. Buffett's putting his money where his mouth is. But I'm curious, what exactly does Berkshire Hathaway see in SiriusXM? Why would they invest so heavily in a company that's facing all these challenges?
Well, there are a few possible explanations. First, as we discussed earlier, SiriusXM is trading at a very low valuation right now. Buffett is known for being a value investor, so he's always on the lookout for companies that he believes are undervalued by the market.
That makes sense. He's basically buying a dollar for 50 cents.
Yeah.
But I'm guessing there's more to it than just the current stock price.
Right. Remember those potential catalysts we talked about earlier? The lower gas prices, the return to office trends, the potential rebound in car sales, those are all factors that could significantly benefit SiriusXM.
Okay, I see the logic there.
Yeah.
But let's not forget about the elephant in the room. Streaming services, Spotify, Apple Music podcasts, they all offer a ton of alternative audio entertainment options that aren't tied to being in a car.
You're absolutely right to bring that up. That's a huge challenge for SiriusXM, and it's something they're going to have to address if they want to achieve that 10x growth the Motley Fool is predicting.
So it sounds like they're walking a bit of a tightrope here. They have some potential tailwinds, but they're also facing some stiff competition.
Exactly. And to complicate matters further, they're heavily reliant on the auto industry for new subscribers.
Which, as we know, can be very cyclical and heavily influenced by the overall economy. If the economy takes a hit, so do car sales. And that could really hurt SiriusXM.
You're getting it. It's a complex situation with no easy answers.
So what I'm hearing is that the Motley Fool is painting a pretty optimistic picture. But there are definitely some risks involved as well.
Precisely. It's not a guaranteed slam dunk. SiriusXM is at a crossroads. And it's going to be fascinating to see how they navigate these challenges.
So we've got this company with some real struggles, but some really, intriguing potential upsides. It's almost like a classic underdog story, right?
Yeah, I like that analogy. And like any good underdog story, there are always a few twists and turns along the way.
Speaking of twists, there's one detail from the article that I found particularly interesting. The fact that SiriusXM has been aggressively buying back its own shares.
Yes. Share buybacks. That's a move that can have a big impact on a company's stock price, especially when the price is already depressed, like it is with SiriusXM right now.
Okay, but I have to admit, I'm not a financial expert.
No.
Can you kind of break down how share buybacks actually work?
Sure. So imagine SiriusXM as a giant pizza. Initially, that pizza is divided into a certain number of slices, representing all the shares of stock available. When a company buys back its own shares, it's like they're taking some of those slices off the table. They're essentially reducing the number of slices available, which makes each remaining slice more valuable.
Ah, I see. So it's like supply and demand. Fewer slices, same pizza, higher value per slice.
Exactly. And in SiriusXM's case, they've been buying back a lot of slices. The Motley Fool article pointed out that they've actually reduced their share count by a whopping 42% since 2012.
Wow, 42%. That's a pretty aggressive buyback strategy. But what do you think is the motivation behind that?
Well, it suggests that the company believes its own stock is undervalued. They see this as an opportunity to buy low, knowing that as they reduce the number of shares available, the price of each remaining share is likely to go up.
Okay, that makes sense.
Yeah.
It's like they're doubling down on their own potential.
Yeah.
So if we combine all these factors, the low stock price, the potential catalyst we discussed, Buffett's investment, and these aggressive share buybacks, does start to paint a more intriguing picture, wouldn't you say?
It does. But remember, investing is never a sure thing. There's always risk involved. And with SiriusXM, those risks are particularly pronounced.
Right, like those pesky streaming services we talked about earlier. They're a real threat, aren't they?
They are. And the reliance on the auto industry adds another layer of uncertainty. Yeah. So while the potential upside is there, it's crucial to weigh those risks carefully.
So we've got this company with some real headwinds, but also some really tantalizing possibilities. It feels like they're at a pivotal moment.
They are. And the big question hanging over their future is whether they can adapt and evolve in a rapidly changing media landscape.
Okay, so now that we've laid out all the facts and explored the different perspectives, let's shift gears a little bit and talk about you, our listener. What are your initial thoughts on all of this?
What resonated with you the most during this deep dive? Were there any aha moments or points that surprised you?
We've given you a lot to chew on, but now it's your turn to be the analyst, based on what we've discussed. Yeah. Do you think SiriusXM has what it takes to overcome these challenges and achieve that 10x growth? Or do you think the risks are too great?
There's no right or wrong answer here. Investing is all about assessing risk, weighing potential rewards, and ultimately making decisions that align with your own financial goals and risk tolerance.
Even if you're not an investor, I think this deep dive has given you a fascinating glimpse into the world of business and market dynamics and the strategic decisions companies have to make to stay ahead of the curve.
Yeah. What I find particularly interesting about this case is how a company like SiriusXM with such a strong foothold in a specific niche is now having to fight tooth and nail to stay relevant in a rapidly evolving media landscape.
It's a classic David versus Goliath story, with streaming services like Spotify and Apple Music representing that formidable Goliath. And just like in the biblical tale, it's going to take some ingenuity and some strategic maneuvering for SiriusXM to hold its own.
And this brings us to a bigger question. How can a company that's built its success on a single technology, satellite radio, adapt and thrive in a world that's increasingly embracing streaming and on-demand content?
It's a question a lot of traditional media companies are grappling with. The rules of the game are changing, and those who don't adapt risk being left behind.
Exactly. And this is where SiriusXM's strategic decisions become even more crucial. What moves will they make to stay ahead of the curve? Will they double down on their existing model, or will they branch out into new areas?
And that leads us to an even more provocative question.
Yeah.
What if the real value of SiriusXM isn't in its current business model, but in its potential to become something even bigger?
Now that's an interesting thought. What do you have in mind?
Well, think about it. They have this massive subscriber base, a well-established brand, and the technology to deliver content directly to millions of cars. What if they leverage all of that to expand into new areas?
Okay. I'm intrigued. Give me an example.
Take their partnerships with major automakers.
Yeah.
As cars become more autonomous, the demand for in-car entertainment is only going to increase, right? Could SiriusXM become a key player in developing those systems for self-driving cars?
That's a fascinating possibility. I mean, people are going to want to be entertained while they're being chauffeured around by their cars. SiriusXM could be perfectly positioned to capitalize on that trend.
Exactly. Or think about all the data they collect on listener preferences.
Yeah.
They could use that data to create personalized audio experiences or even targeted advertising platforms.
Now you're talking about a whole new revenue stream. They could move beyond just subscriptions and tap into the lucrative world of advertising.
Right. And let's not forget about the potential for international expansion. Satellite radio might be a mature market in the U.S., but there are huge untapped markets around the world.
So you're envisioning SiriusXM transforming from a niche player into a global media powerhouse. That's a pretty bold vision.
It is, but I don't think it's entirely out of the realm of possibility. Of course, any kind of transformation like that would require strong leadership and strategic investments and a willingness to embrace new technologies and business models.
That's a crucial point. I mean, do they have the vision and the agility to make that kind of leap? That's something for investors to ponder as they assess the company's long-term potential.
It's a question worth considering. Because even if SiriusXM doesn't achieve that 10x return that the Motley Fool is predicting, there's still the possibility that they could become a much bigger and more influential player in the media landscape.
It all comes back to adaptation and innovation. Can they evolve and find new ways to create value in a rapidly changing world?
Well, we've certainly covered a lot of ground in this deep dive. We explored SiriusXM's current challenges. We analyzed the Motley Fool's argument for a potential 10x return, and we even considered the possibility of a much grander future for the company.
Yeah, we looked at their financials, the competitive landscape, and even factored in Warren Buffett's investment. But at the end of the day, the decision of whether or not to invest in SiriusXM is up to you, our listener.
And that's what we hope this deep dive has provided.
Yeah.
The information and the insights you need to make that decision with confidence, whether you're a seasoned investor or just starting out. We believe that knowledge is power.
Absolutely. And in today's complex and ever-changing world, that's never been more true. So as you go forth and navigate the intricacies of the market, remember to think critically, stay informed, and always do your own research.
It's great advice. Thanks for joining me on this deep dive. It's been a fascinating conversation.
It has. And who knows? Maybe a few years down the road, we'll revisit SiriusXM and see how the story unfolds. Until then, happy investing, everyone.